Good afternoon, everybody. It is Saturday, January 22nd. And when you have the kind of week like we had last week, what do I like to do on the weekend? I get outside. And so that's what I'm doing right now. But yeah, let's talk a little bit about everything that happened last week. Really terrible, ugly week for the indexes. I think it's been long overdue. In conversations I've had over the past year or so, people always ask me, and I've mentioned this before in these videos, do you think the market is due for a pullback? My answer is always yes, because normally at some point during the year, you get yourself a 10 or 15% pullback. We're definitely in that right now. The NASDAQ now is down a little bit more than 15% year to date. S&P down a little less than that, the Dow hanging in there as well. But, you know, they're all approaching down into correction territory at this point. Under the surface, the damage has been even more significant. If you look at some of the really big high-flying tech stocks, for example, that were, I'm thinking of Zooms, Pelotons, these kind of stocks, which we've never owned those stocks, but stocks that really ripped during the early days of the pandemic. These stocks are down 70, 80% off their highs right now. Small cap stocks on Friday closed below levels last seen in January 2021. So we're talking over a year ago. And in terms of what you're seeing, particularly in the NASDAQ, over 20% of the stocks in the NASDAQ are now trading at 52-week lows. So the carnage kind of under the surface is even a little bit bigger than what the indexes might say. And also, too, you're seeing bonds under pressure now, too. The long end of the yield curve. So we're talking bonds maturing out 10, 12, 15 years from now. You know, we've had rates tick up. We hit 1.9% in the 10-year, which is historically unbelievably low compared to where we normally are. But in the scheme of things in the last few years, that's a pretty big uptick. Bond yields kind of settled down around 1.7, 1.75% toward the end of the week. So that seems like it's stabilizing a little bit. But you know what? This market right now, it has been more in the last 7-8 years than I think I've ever seen it. So much of what we see, the trading that happens in the market, is really not human beings behind it. It's programs, and you literally have algorithms that are like running through Twitter feeds, news items, that type of thing, that are generating buy or sell orders based on that. And when you start to see, we saw this, we've seen it a few times in the last few years. You really saw it, obviously, in March of 2020. But when you start to see some of these key levels that are getting hit, the algorithms sell, and they sell, and they sell, and eventually it stabilizes. But we're in one of those modes right now. So I think the volatility is going to continue for a while, if I had to guess, at least well into the first quarter. It really depends on what earnings are doing. The good news is when you see these declines that we've had, is that the market that, to me, in November, December, looked to be on the historical side of kind of expensive, is now kind of getting back in line. Forward earnings, PE of forward earnings is about 21. Normal is about 16, 17. We're in the mid to high 20s at different points in 2021. So we're kind of getting back to more normal valuations. I think that's probably a pretty good thing. This week coming up, hopefully this video will get out before the Fed meeting, but we got the Fed coming up this coming week, which will be the week of January 24th. And the expectation is we're going to see a rate hike to try to rein in this inflation. Some people are even saying we might get 50 basis points, which would be a pretty big one. A lot of the volatility I think we have has been pricing some of that in as well. So, you know, my advice during these periods of time is go outside, go for a walk, get some fresh air, because it's not fun. It's not fun when we get in one of these liquidation modes or these risk-off modes, but we're definitely in one right now. Anyway, we've been talking to a lot of clients about this. And if you have any specific questions for me, we're going to be reaching out also in the next week or so to everybody, just scheduling some phone appointments to get caught up with people that we haven't spoke with in the last couple of weeks or so. Just answer some questions you might have. In the meantime, shoot me an email. You can respond here on any of the social media pages, and would love to elaborate on some of these issues. If you have questions that I didn't address here, specific questions, I'd love to hear them. This has been really fun in the last 8-9 months doing these videos, and would love to answer any questions you have. Reach out to me or a member of my team, and you know what? It's the weekend. Markets won't start trading again until Monday. In the meantime, we're in Arizona. It's January in Arizona. We are at the sweet spot of the center of the universe right now. So as for me, I'm going to get outside and enjoy some of the sunshine and beautiful weather, and I'll be back at it on Monday. Take care, everybody.